In this video, we're going to discuss some top tips on how to improve your credit. It's really important to monitor your credit on an ongoing basis. This can prevent mistakes from going unnoticed, and it can also prevent identity fraud, which is really common in today's market. There are 3 different credit reference agencies that lenders use. The first one is Experian, the second is Equifax, and the third is TransUnion. So some lenders will only use one of those credit reference agencies, whereas other lenders may use more than one. Some lenders even use all 3. The easiest way to monitor those 3 credit reference agencies is through a company called Check My File. Check My File holds data on all 3 of the credit reference agencies, so you can see all of the information on one page.
Now let's look at the reasons why you may have a low credit score. It could be your previous adverse credit. That could be anything from as little as a missed payment all the way to a CCJ, default, or a bankruptcy. Another contributing factor to your low credit score could be your high level of debt that you currently have. The higher the level of debt you have, potentially the higher risk you are to a lender, which will negatively impact your credit score. Another contributing factor to your low credit score could be your lack of previous borrowing. If you've just turned 18 years old and you previously never had any debt at all, that can contribute to your low credit score. Also, historically, you may not have been a borrower at all. Until you start proving your creditworthiness with a lender, your credit score is likely to remain low.
So, some top tips on how to improve your credit. Number 1.
If you've had previous adverse credit, such as CCJs or defaults, it might be worth paying them debts off. Until you pay them debts off, your credit score is likely to remain low. Top tip number 2.
If you're not registered on the electoral roll, that's definitely something that's worth doing. Once you've registered on the electoral roll, that really helps your credit score because lenders then can see a clear trail of your address history. Top tip number 3.
If you have a high level of credit borrowing that you're not utilising at all, it's probably worth closing that borrowing down. Until you close that borrowing down, your credit score is likely to remain high because the lender will see you as a high risk due to the exposure to debt you currently have. Top tip number 4.
It may be that you're using a large proportion of borrowing, so you may have a number of credit cards with balances that are really high. It would be a great idea to try and get those balances down because the lower proportion of debt that you have against your income will really help with your credit score. Top tip number 5.
It could be that you've never had any previous credit borrowings, so my suggestion will be open up a small credit card, make sure you pay it off every single month so you're not incurring any interest. Now that will build a trusted relationship with a credit borrowing lender. Hopefully that will impact positively on your credit score.
So hopefully there's some great tips there on how to improve your credit score.
For more helpful tips on how to get a mortgage with bad credit, please head over to our next video.